Investment strategist Eva Ados. And before we start discussing those names, I know you saw Apple Oven at the top of the screen here. I want to talk to you about what a lot of people are calling a trap right now, the Gartner IT trap. This is a real famous chart, and essentially they're saying when these hot new stocks start to move, there's a stealthy phase. Most people haven't heard about it. For some reason, they think the smart money's in there. Smart money and public money have reversed. Public money's been buying this here, and so your first sell-off usually doesn't have these stocks go down much. It's called the bear trap. You don't want to go short them because they go back up. But now, you see where it says bull trap right here? This is where they're saying we are, Eva, that, okay, these stocks have had huge moves. Everyone's talking about new paradigms. They pulled back this little bitty bounce like we're getting today. Don't buy it. What do you say to something like that?
I'm buying it. So I think we're far along. I think this is not a bubble because if you look at the fundamentals, the valuations of these stocks are not detached from the fundamentals. There are some valuations that are a little far along the near-term fundamentals, but in most cases, that's not the case. And
right.
AI is real, AI growth is real, and you can actually measure it.
Well, here's the thing, though. You do say AI this has been their first test, so to speak. So that dip that we saw, that's not a bull trap, but it was a test. Valuation fatigue, everyone's talking about return on investment, right? Even if they can even raise that kind of money. Energy constraints, we know that's an issue. And just the urge sort of to rotation out of those names. We're past this for now?
I think we're far along. We're not completely past it, but we are far along. I think more and more of us are realizing that we have a lot of negativity, as you said, in the market. People saying that's a bubble, that's an AI bubble. It's not like the .com. In this case, you have real cash flows, you have record earnings, and you have productivity that's measurable because of AI. And you can actually measure that. That's what makes this different. That this time we have data that support, in most cases, the valuations.
Yeah, Mag 7 makes they make $1 billion every 16 hours. You say AI superpowers and their greater role in the economy, right? These aren't sock puppets. In fact, moving faster than the Federal Reserve, another catalyst now, they're going to spark a growth super cycle. So this sounds like more like the beginning than the end.
I think so, exactly. And in some cases, I want to be honest here, in some cases you see companies that say we use AI, but you can't really measure it, and then they're firing people, and then they're hiring them back. We want to avoid these mistakes. But you have companies like AppLovin, which I think is the best example of AI
We're going to get that 1 second, but let me ask you real quick before we switch. Deflationary impact.
Yes.
In an era right now, the Federal Reserve is so focused myopically on inflation rather than the jobs crisis. You're saying deflationary impact is what we're going to get from AI.
Yeah, 100%. And you see this because the AI is cutting jobs faster than the Fed is cutting rates. And as a result, in many cases, we see lower jobs that's coming down. People are getting fired. And that's an unfortunate scenario because spending is coming down. And then you have less liquidity in the market. And so that's deflationary. But that's supporting the valuation. So you have the bad news, which is bad for the people. And then, but that actually supports the growth stocks and their valuations in our case.
So AppLovin, I don't know how much we're up on this since you came on. I mean, you mentioned this a couple of years ago. This stock has been a juggernaut. It had 3 short attacks against it. The media helped those shorts try to push the stock down. It's come roaring back. The #1 percentage gainer in today's session, and you think this just keeps going? Yeah,
you know what's interesting about AppLovin? The gross margin is same as its peers, as its category, but its EBITDA margin, it's what happens after the gross margin that makes it unique. Its EBITDA margin is 5 to 6 times higher than the rest of the category. That means that they are using AI better than anyone to streamline their operations, cut costs, expand their margins. That's why we love it, and that's why it's been one of the best S&P 500 names.
It's a beast. It is an absolute beast. Robinhood's been a beast this year. And you like this predictions market tokenization. You say this is going to continue to drive growth.
Tokenization is a market measure in the trillions. Prediction markets, as their CEO says, is on fire. Last time we spoke, between February and September, they did 4 billion event contracts. Now, just in October, they did 2.5 billion. That is an area that's growing. Whatever we said last time, add an exclamation point to it.
Can't let you go without Coin. It's so funny because I've been saying this year that Coin and Robinhood, the performance there signals a transferring, a changing of the guard. Fintech dominating over traditional financial companies.
And that's the key player because it's bridging traditional finance with digital assets. And there is a quite profit-making machine when it comes to Coin. Not many people speak about it. It's USDC because every dollar in their platform is pure margin. There's no overhead. It goes straight to the bottom line. And that's what I think is going to have. It was 14% of the total revenue last year was related to USDC. That's going to 1/5 of the total revenue now, and I think it's going to grow.
Wow, good stuff. Love it. Great seeing you.
Great seeing you.
Congratulations. What timing? AppLovin, #1 stock, and you've been touting it for 2 or 3 years. Can't beat that. Thanks, Eva.